Well, despite the fact that US markets fell in trading overnight, they did in fact during the session hit another all-time high. And that must be the phrase of the year, all-time highs once again for US indices before pulling back into the close and finishing it on the in the red. There was a lot of individual stock movement. Volatility remains elevated, and following the results season that we saw in July and August, the hits for a lot of the stocks just keep coming. Yesterday we saw Netflix up 2.5%, Oracle down 2.5%, Alphabet down 1.7%. The movement is significant. Gold, however, is looking like it'll touch $4,000 very soon, traded up to 3,984 overnight. There's very clear upward momentum there, and of course one of the major beneficiaries have been gold stocks. The VIX also moved higher last night too, a bit of a concern by less than 1%, but nonetheless that does indicate some growing concerns amongst investors. And there is some talk of valuations have run well ahead of fundamentals. That won't be any surprise to those who do practice the art of valuation in companies. We've been divorced from any known valuation methods for some time when it comes to US stocks in particular. Oracle was hit last night for a number of reasons. One of them was that its cloud business is not as profitable as previously expected. And this could be the beginning of a warning sign for all that AI-generated froth around valuations. A lot of stocks have run well ahead of any potential revenue increases they might see, and that generally leads to a corrective move. And last night we saw that argument coming out. Oracle did release numbers that showed that their profitability, their margin was down to 14%, and that compares poorly to the margins they generally get in their business of around 70%. The concerns were around NVIDIA chips, in particular the Blackwell chips, and the renting of those chips has proved to be a very thin margin business. And so some concerns about profitability in AI-affected stocks. It has in fact been argued that AI is a bubble. The revenues don't match the valuations, but the growth projections here are also eye-wateringly large. And even if they do manage to get to these growth projections, the revenues certainly make it very hard to justify the valuations we're seeing. Nonetheless, MIT put out a report saying 95% of organisations have no return at all on their AI spend. And if that becomes evident, we could see once again some strongly corrective moves in AI-affected stocks. In contrast, Dell was up 3.5% yesterday. It doubled its revenue and its profit targets. It's citing strong demand for its AI servers. Dell shares are up 31% year to date, and earnings are lifting at a rate of around 15% over the last 4 years, and that paints a very healthy picture, as evidenced by the move up we saw. On the other hand, Tesla under pressure overnight, down 4.5%. They've released a new updated Model Y. This is meant to take on the international competition that has been cutting Tesla's grass. Unfortunately, analysts are unimpressed, and although it does come in with a price tag of just under $40,000, it's considered not cheap enough and not affordable enough. Tesla stock has been up strongly, up 22%, but it got hit last night, and there's potential for it to hit an air pocket if you look at the chart. One more to look at this morning on our watch list is Greatland Resources. The Aussie listed gold miner was up almost 10% yesterday. It's put out a third quarter report that impressed analysts. It's showing a high cash balance, no debt, and solid sales. And the stock's up 18% since listing in June, but a number of analysts have a strong buy on Greatland Resources.